Today we're diving into one of my favorite kind of videos, a look back in time to see how much money you would have made if you had invested in a company early, and what we can learn from this going forward. We're talking about Apple. Yes, the tech giant that's been a part of so many people's lives, whether you're holding an iPhone, working on a MacBook, or listening to music through AirPods. But here's the question. If you had invested $10,000 in Apple stock 10 years ago and just left it alone, no complicated strategies, no market timing, just bought and held, where would you be today? Let's break it down. But before we get to that, if you're new here and you never seen my channel before, my name is Elliot and I upload videos about investing, the stock market, and I do updates on my own portfolio, which is on the Robinhood app. So if that's something you enjoy, please consider subscribing. I upload videos just like this every 2 weeks. Let's rewind to June 1st, 2015. On that date, Apple stock, ticker symbol AAPL, closed at $32.63 per share, adjusted for stock splits along the way. Fast forward to August 2025, and Apple closed at $200.85. That's a gain of over 515% just from price appreciation. If you had invested $10,000 in Apple stock in 2015 and held through today, your investment would now be worth over $61,500. That's a gain of over $50,000. And remember, that's without you doing anything fancy. No trading, no time in the market, just buying and holding. Now compare that to the S&P 500, which returned about 170% over the same time. Apple more than tripled the return of the overall market. A lot of people think of Apple as a growth company, but it's also been returning cash to shareholders through dividends since 2012. Even though Apple's dividend yield isn't high, usually hovering around 0.5% to 1%, those payments are consistent. And if you had reinvested them, your returns would be even better. With dividends reinvested, your $10,000 investment could now be worth over $65,000. That's an additional $3,500 to $4,000 in gains just from reinvesting those quarterly payouts. It's a reminder that even lower yielding stocks can deliver meaningful long-term results when you stay patient and let compounding do the work. Let's break down exactly how Apple pulled this off, because this wasn't just luck. There were clear drivers behind Apple's rise. It all starts with Apple's hardware. The iPhone remained the company's most important product. But what Apple did differently was build out an entire lineup of devices that work together seamlessly. AirPods became a huge hit shortly after launch in 2016, leading the way for wireless audio. The Apple Watch sold tens of millions of units per year and became a go-to wearable for tracking health, fitness, time, and more. Mac computers received a major upgrade when Apple began designing its own chips, giving them faster performance and longer battery life. iPads continued evolving from casual media devices into powerful tools for professionals, students, and artists. Apple's ability to make its devices work smoothly together made it easier for customers to stay inside the Apple ecosystem and harder to leave once they were in. In 2015, Apple Services division was a smaller part of the business, bringing in about $20 billion a year. Today, that number has grown to over $85 billion annually. Services include iCloud storage, Apple Music, Apple TV, Apple Care, Apple Pay, the App Store. This part of the business became Apple's growth engine. It created recurring income that didn't depend on people buying new devices every year. Over the last decade, Apple bought back hundreds of billions of dollars worth of its own stock. This is huge. Fewer outstanding shares means each share you own becomes more valuable over time. It also boosts earnings per share, which investors get rewarded with higher stock prices. Apple's buybacks have been one of the most effective and consistent shareholder return strategies in the entire market. So, what does the future look like? Is Apple still worth buying, or is the best already behind us? Let's look at some of the areas where Apple is planting seeds for the future. In 2024, Apple launched the Vision headset. It's not a massive market device yet, it's expensive and still very new, but Apple has a history of starting small and improving over time. Think about how the iPhone began in 2007. It wasn't until the App Store launched and the camera improved It became the centerpiece of our digital lives. Apple is betting big on new types of digital experiences, and the Vision headset could eventually open up an entirely new product category. The Apple Watch is becoming more capable every year. It already monitors heart rate, sleep, patterns, oxygen levels, and activity. There's speculation that future versions may add even more advanced features for monitoring your overall wellness. This pushes Apple deeper into the world of health and personal data areas, where people are willing to pay for better tools, more insight, and peace of mind. Apple has expanded into payments and money management in a big way. Apple Pay is widely used for countless payments. Apple Card offers cashback incentives for iPhone users. And Apple Savings launched with a strong interest rate to encourage savings directly within the Apple ecosystem. These aren't just side features, they're ways Apple is becoming part of people's everyday financial lives, not just their tech routines. Apple's biggest future gains may not come from selling more iPhones in the US or Europe. They could come from growing in countries like India and parts of Africa. These are regions where smartphone ownership is still expanding and income is rising. Apple has already begun moving parts of its manufacturing to India, which not only helps with cost but also reduces dependency on any single country for production. There's still a huge global market Apple is tapping into. This is the big question. Is it too late to buy Apple? The truth is, Apple probably won't go up another 500% over the next 10 years. It's a massive company, now worth more than $3 trillion. But that doesn't mean it's finished. Apple is still hugely profitable, cash rich, innovate in new areas, returning money to shareholders. And perhaps most importantly, people trust Apple's products and keep using them year after year. If you're looking for explosive growth, you might want to look elsewhere. But if you want a solid, reliable company that continues to grow and reward long-term shareholders, Apple has a strong case. To recap, a $10,000 investment in Apple 10 years ago would now be worth more than $65,000 with dividends reinvested. Apple achieved this through innovation, financial discipline, and building a product lineup that people use every day. Looking ahead, Apple is moving into new product categories, new markets, and even new industries. So if you enjoyed this video, please make sure to give it a like, subscribe to the channel, and let me know in the comments below. Do you think Apple can keep growing over the next decade? And we'll see you next time.